Hello everyone, welcome to EduTop. So in today's session, we are going to discuss a very important news article of finance, that is the regulator, that is SEBI, has proposed new norms for the foreign portfolio investors. So in this session, we will discuss that what are these new norms, why SEBI has to propose the new norms for the foreign portfolio investors. So now before starting with the session, please subscribe to our YouTube channel if you are new to the channel and join our Telegram channel for the PDF of this session. And you can get the link of the Telegram channel in the description box below. So now starting with the news article, the SEBI has proposed to allow the foreign portfolio investors to participate in the commodity derivatives market. So in Finnomics series, I have told all about the derivatives, that what are forwards, futures, swaps, options, and what are derivatives. So if you want in-depth knowledge about the derivatives, I will give the link in the description box below. You can go and watch. Here I will tell you in brief that what commodity derivative market is. So this commodity derivatives market, see, derivatives are what? Derivatives are the financial contracts. They are the financial contracts that are deriving its value from the underlying asset, and here the underlying asset is the commodity. It can be any agro product, it can be onion or something, or it can be metals. So the commodity here is the actual commodity from which the financial contract is deriving its value. I hope now you understand that commodity derivatives market is trading in the financial contracts. It is trading in the derivatives that are deriving their value from some underlying asset, that is commodity here. Okay, actual physical commodity. So they are actually the financial contracts. They are not trading in the commodities. They are trading in the financial contracts that are deriving its value from the underlying asset, that is any commodity it can be. So now SEBI has proposed that allowing FPIs registered with it. So we should allow only those foreign portfolio investors that are registered with the SEBI to participate in exchange traded commodity derivative in recognized stock exchanges. So we should allow the exchange traded, that is the exchange traded derivative is a financial contract that is listed and trades on the regulated exchange. So that is trading in the regulated exchange means NSE or BSE. Or they can be national commodity and derivatives exchange. Okay, so the exchange traded derivative means only those commodity derivatives that are actually trading in the recognized stock exchanges. Only those commodity derivatives should be allowed for the foreign portfolio investors to trade in. Okay. So in its consultation paper, the regulator has suggested that foreign portfolio investors should be allowed to trade in all non-agricultural commodity derivatives and a few selected broad agricultural commodity derivatives. So that is the financial contract that is deriving its value from non-agricultural commodity. That should be allowed for the foreign portfolio investors, and the agricultural commodity, only some agricultural commodities financial derivatives should be allowed for the foreign portfolio investors to begin with. Okay, so it has been said in the consultation paper by the SEBI. So consultation paper for allowing FPIs to participate in the commodity derivatives market. The objective of this consultation paper is to get the comments from the public on the proposal for this. Okay. So now why the SEBI is saying that we should allow the foreign portfolio investors into the commodity derivative market, that why SEBI wants such a thing. Okay. So allowing FPIs to participate in the exchange traded commodity derivatives will increase the depth of the ETCDs, as well as it will increase the liquidity in the ETCDs. In the market where exchange traded commodity derivatives are traded, the liquidity will increase in commodity derivatives market. Enhanced liquidity can gradually, slowly enable the Indian commodity derivative market to serve as a global benchmark for various commodities. So what will happen, that as more players are coming into the coming into the exchange traded commodity derivatives market, more liquidity will come, more trading will happen, and India can become a global benchmark. India can become a very high, can get the high position in the global commodity derivative market, and instead of being the price taker, it can become the price setter for the exchange traded commodity derivatives. Okay, and for the commodities. So next is FPIs and the custodians have also shown their shown their interest into investing, into participating in the ETCDs. Their participation might help lower the transaction cost also. As more of the liquidity is coming, as more of the players are coming, the transaction cost will be lesser, as it just like you are printing one contract. Instead of that, you will print thousands of contract with the same machine. So that will be beneficial. So transaction cost will be lesser in the commodity futures segment through economies of scale, as more of the transaction will happen, as more of the liquidity will be there. So economies of scale will be there. And why are we talking about particularly futures? Because we are talking about exchange traded. Exchange traded. That is, futures are the ones, see, the forwards and the swaps are the one that are mostly traded over the counter. So futures segment is the contract, is the derivative that is traded in the exchanges, that is exchange traded. Okay, that is exchanged in the regulation of some authority. So it is futures segment that we are talking about, because we are talking about the exchange traded. So next is eligible. We have understood that why SEBI wants to bring the foreign portfolio investors. They are interested, liquidity will be more, we will become global standard, we will be global benchmark for the ETCDs and everything. Now who are eligible? Like until now, no foreign entities were in India that were trading in ETCDs. Something like that was happening. No, it was allowed. Currently eligible foreign entities. So what is this eligible criteria that we will see? So eligible foreign entities are allowed to participate in the Indian commodity derivatives market. So this EFEs, that is the eligible foreign entities, this criteria was brought by the SEBI to allow only those foreign investors or entities who have actual participation, who have actual exposure to the Indian physical commodity markets to participate in the ETCDs. So what the SEBI has said, that eligible foreign entities like who can participate in the ETCDs, they should actually have the exposure in the physical commodity market. That is, they should either actually buy the onions, buy the metals in the physical market, or they should actually be selling the things, selling the commodities in the physical market in India. So only those entities that are actually trading, in the physical commodity market of India, they can get the exchange traded commodity derivatives also. So it is a very big criteria to set, that you have to actually trade in, you have to actually be exposed to the physical commodity market of our country if you want to trade in the ETCDs. Okay, that is for hedging their exposure. So you are taking the ETCDs to reduce the risk. Instead of getting the profits, you are just doing it so that you can reduce the risk of getting involved in the physical commodity markets. So it was the criteria, and it was a very hard criteria to meet, that if you want to invest into our derivatives, you have to actually be exposed to the physical commodity market. Now if I only want to invest, okay, if I only want to get the derivative, if I only want to have the financial contract, why should I be exposed to the physical commodity market of your country? That was the question that was raised, and that's why what was happening, that the EFEs, there was near to null EFEs that were actually trading in the ETCDs. There were like one or two or very less, near to null, that were trading in the ETCDs, because they were asking that if I want to invest in the financial contract, why should I be exposed to the physical commodity market? Okay, so FPIs, being financial investors with huge purchasing power, have not yet been allowed to participate in the ETCDs. FPIs, foreign portfolio investors, are the one that only invest in the financial contracts. They will never be interested in the physical commodity market. So FPIs, foreign portfolio investor, portfolio actually means that they are trading in the financial market only, they are not trading in the physical market. So they have huge purchasing power. If they be allowed in the ETCDs, they can actually increase the liquidity into our country, into our stock exchanges that are trading in the ETCDs. So FPIs, being financial investors with huge purchasing power, not yet been allowed to participate in the ETCD, and that's why SEBI has brought this consultation paper that they should be allowed. Stop this kind of situation that they have to be involved in the physical commodity market. Okay. So now who will be eligible? The consultation paper comes after SEBI Commodity Derivatives Advisory Committee in its meeting deliberated. They talk about that there is a lack of participation by the EFEs. because they have to get involved in the physical commodity market. They do not want to get involved in the physical commodity market because they are interested in the financial contracts. They are interested in the financial market, not the physical commodity market. So, and they recommended on participation by FPIs and ETCDs. So they said that you should allow the FPIs to trade in the ETCDs, and when the FPIs can be allowed, when you will stop this condition of necessary actual exposure to physical engagement should be discontinued. Only then the FPIs can come into our country. Foreign portfolio investors will be able to invest in the ETCDs when this condition of physical commodity market engagement will be discontinued. And foreign investors may participate in Indian ETCDs through the investment route, through the foreign portfolio investment route rather than this physical commodity route. Over the past few years, the regulator has allowed institutional players like the AIFs, mutual funds and portfolio managers to participate in commodities market. Here you can see that in the phase 1, the alternate investment fund, the portfolio management service, the mutual funds and the direct participation of foreign participants having exposure to commodities, that is EFEs. So they were allowed. So who were allowed? AIFs, mutual funds, portfolio managers and the EFEs, that is the eligible for foreign entities, were allowed and they had the exposure to the physical commodities. Okay, now it has been said that in the phase 2, SEBI wants to bring the foreign portfolio investors into the ETCDs. Okay, so you have to remember that who has been allowed? These has been allowed, and SEBI wants to allow the FPIs also. So these has been already allowed and we want FPIs also to come. So precautions, now if we are bringing, if the SEBI wants to bring FPIs, there should be some precautions that needs to be taken. That is, SEBI has recommended appropriate measure including the investment limits. Otherwise only one player will become too big in the ETCD. So we have some investment limits that to set. Margining norms. So see, when you are trading in the futures, you are not giving the whole value at the start of the financial contract. So in the start you are just giving a margin payment. So margining norms should be there. Risk management measures should be there, may be adopted while allowing the foreign portfolio investors to participate in the ETCDs. So now there is a question that recently SEBI has proposed to allow FPIs to participate in commodity derivatives market. Currently, which of the following are allowed to take part in the exchange traded commodity derivatives? Very easy question. I hope now you can easily answer this question. So these were the people that gave the right answer of the previous session question. Well done you guys. And it was Manoj, Arvind, Malay and Abhinav. Okay. So now thank you very much. If you have any query, you can mail us here or you can contact us through this number. Thank you guys.